It looks so. I feel like I'm in the studio right now. Okay?
Yeah, kind of that vibe.
Kind of that
That's it,
vibe, right?
So
Yeah,
that's right.
like that. So, how are you, Sashwot Dai? It's been a while since I met you.
Yeah, I'm good.
Uh huh.
I'm fine, and thank you so much
Uh huh.
for giving this opportunity
Oh, no
in
worries,
the
Dai. It's my
podcast.
pleasure. It's my
So
pleasure.
how are you doing?
I'm doing pretty good actually. As a
Great.
bully, I've been working out.
Mm-hmm.
Sometimes it's monotonous, but I mean, I'm getting the hang of
Okay,
it.
so you have however you manage basically,
Uh huh.
despite the
Yeah,
timings and all.
I try my best.
Okay.
Annie, how about yourself?
Yeah, I'm good. Currently I'm not engaged full time.
Uh huh.
In any role, basically a formal role.
Ajay.
I've been teaching, as you know, I've been teaching in KCM.
Uh huh.
And then for my own investment portfolio, I do some analysis and all. And I'm engaged in a consulting role regarding portfolio analytics. That's portfolio analytics part.
So you're doing 3 jobs at once?
Not 3, 2 I would say.
Two,
Two part-time jobs.
2 part-time jobs.
Not full-time.
Interesting.
Not engaged full-time right now.
Interesting. And what made you become a professor?
It's not actually planned. As you know, our college approaches alumni with at least 4 to 5 years of experience.
Yeah, that's a very good tactic.
And through that, I got contacted. Basically, the college contacted me. So that sir contacted me, as you know. And then I got the role of lecturer, let's say. And then I'm teaching basically. It's been 1.5 years.
Okay.
Almost.
Is it fun?
Yeah, it's fun. Yeah. It's fun, and it's teaching has imbibed a kind of respect within me for teachers, because now I realized how difficult it is to teach.
Really?
Because you have to prepare as well. You have, if not more than equal effort. It's not that only students put the effort; the teacher also puts significant amount of effort.
Damn.
While a person has to teach, so I guess. It has made me respect teachers more.
Okay, because you had to work hard on the assignments.
Yeah.
Wow. Okay, that's quite interesting, because I mean, I did respect teachers, but I was like, these guys have it easy. They don't have to do homeworks. They don't have to do anything. Just like
it's not like that, because I guess teachers have to do more homework, in the sense that there's no one to say this is your deadline, or you have to complete it by this, that, and the other. But still, before class, you have to get a strong hold of the material, and what things you want to discuss in the class and all those things. So it takes quite some time. Yeah, for the classes as well.
I know there are like toppers in the class. So what's the most funniest answer you've ever seen in an exam paper? In an exam paper?
My subject being finance, it would be, I cannot exactly recall, that fun, the funny part or funny answer, anything as such, but there are some answers that actually, get me enraged, because I have taught.
Yeah, I want to hear.
As simple as when talking about balance of payment, and when talking about current account, you've discussed so much in the class. You've told them that XYZ, like remittances and all, are part of current account, and then they in the exam they include it in capital account. So that's basically they make a mistake and all those things. As a teacher, you do not laugh at those mistakes. Actually, you sometimes feel enraged, and sometimes you also question yourself, is your teaching method good enough? Have you ever doubted yourself, did I teach this to this guy? Did I not teach this to this guy? What is this answer? Not regarding whether I taught or not, because because a teacher is always certain what is taught or not. But
it's always the student.
I've been confused about my teaching methodology, especially during my first 6 months of teaching. That time I had doubts that, are they understanding properly? Are they making mistake due to, as a teacher, I'm not being able to explain them things correctly? You were too self-concerned. Yeah. Or is it that they are not working hard? So, that doubt was there, but now it's not there, because I'm used to out of the box kind of answers, let's say, if we can say incorrect answers as out of the box answers. So I'm used to those things. Things, huh? You're not like this idiot. That's the answer. Not exact, as I said, not exactly this idiot, but you should have known this type of thing. Yeah, sometimes that's a sugarcoating thing. all those.
ठीक sir. Any
But you would not be wanting to teach idiots. Then it would make you an idiot as well, I guess. So
no, but
if it makes sense.
but wouldn't it be the other way around, Tara?
As in?
Like the students come to you because they don't know anything.
That can be as well.
So in one sense, they are idiots and they want to change
Not
into.
knowing is not exactly being an idiot, I think so, because there are things people won't know. Still, there are things I don't know. As I've read it somewhere, I think it was during a philosophy class when I was in my first year. There was one quote I explicitly remember, because before that, the saying was that half knowledge is a dangerous thing. And after the philosophy class, the quote said that, and I very vividly remember it. It said that, your understanding or your boastfulness that one has full knowledge or complete knowledge is actually a dangerous thing. So it's not half knowledge that's dangerous. It's a person's thinking that he has complete knowledge, which is rather dangerous.
So what's the solution?
Solution is know your limitations and try to, learn as much as possible.
So so more knowledge, more confusion. No knowledge, no confusion.
Especially in the field of investing now, since I'm in the field, so let's connect it there. I see most of the analysts who are trained and who are basically been trained in investing and who have read about risks and how to mitigate risks and all. They're not able to make the very risky move. What they perceive as risky move. Suppose some XYZ stock, let's say in our market, there are finance companies and hydro companies which gain buying traction due to the news and all those things. They increase as well and have provided handsome returns to investors who have traded on the stock. But a proper financial analyst who is more imbibed towards value investing, or let's say fundamental analysis, would not be investing in those stocks, right? So who looks at the financials and all will not be investing in bogus stocks. Some of the finance companies and some of the hydro stocks are bogus, basically. But still, due to the reason a properly trained professional might not be investing in risky stocks, what he perceives as risk, and a layman would be investing regardless of the risk. He would just buy it, market.
Herd effect.
Yeah, herd effect. He would go into the herd mentality and buy it. And because of the momentum, he'll be profiting, let's say 15 to 20%. Whereas this guy who looked at the financials and thought that this business is wrong, is not, in the short term, will not be making that significant amount of money. It's both way around. In profit as well as in loss. So, so that's a basic thing. But more knowledge than less knowledge. That
you spoke about value investing, fundamental analysis, technical analysis. If I came to you as a student, how would you explain them in the simplest terms?
Simplest of simplest terms would be, you have this location, right? Location. So I'm sure you've selected this location based on some of the inherent tenants of this location, in the sense that maybe this location is good for your business, maybe your customers are near you, maybe this place is suitable for whatever businesses happens in this location. So looking at all those factors that actually impact your business, and then taking the decision to rent a space or buy your space, your office would be similar to fundamental analysis, because fundamental means the root. You're looking at what is important for the decision process.
So like the location of the office, any affordability, any like the access to the road and all of those things.
Everything.
Practicality, basically.
Practicality and all those things you look and you'd buy. So that would be kind of a fundamental analysis. But technical analysis would be some XYZ dude just saying that, okay, if you buy office in this area, due to its northwest, south, whatever facing location, you'll have a good business.
Vastu.
But I'm not trying to demean any knowledge, because I respect all knowledge. And in our tradition, it's said every knowledge is, what we call a symbol of Saraswati. So I respect all knowledge, but still that would be similar to just following the information that's in the market. Not exactly, but still I would look at it that way. more clearly, if I'd have to say, basically the difference is that one who looks at the books of accounts, basically financial statements, income statement, balance sheet, cash flow, and tries to understand the inherent business, more importantly, and what are the factors that would make a business work, and what might be the factors that might not make the businesses work. If you would look at businesses or investing before investing, if you look things from that angle, that is fundamental analysis basically. And technical is only price volume chart. So today XYZ company increased 5%. For the past maybe 6 months it's been increasing for 10%. So next 6 months, trying to extrapolate the same 6 months into the next 6 months, if someone says that it might increase for another 10%, that would be technical. So it's price volume based technical analysis.
I see. And how about value investing?
Value investing is more closely related to fundamental analysis.
Okay, what's
value investing encompasses fundamental analysis, because value investing is as simple as knowing business. Basically, if I open any business, remove keeping stock market aside, because most of the time people get confused when they think about stock market and investing together, because when there's stock market, they tend to forget that there's an underlying stock, and that underlying stock is a company.
Yes,
it's not just that ticker that moves
on the charts
and down, during the day or over the years or months or whatever time frame. So basically, there's a company, and if that company does well, the investors will do well. So people usually forget that part. So basic value investing is, if I am starting a business or I've done some business and I come to you, okay, so they've you know me,
yes.
I'm a diligent person, whatever, I work hard. This is my company. Please invest in my company. So in that scenario, all the questions that you would ask me before investing in my business, that is part of value investing. So you would ask me what you do. What is a business? What is a profitability? What are your growth plans? Are there any point of failures? What are your points of success? What is the scenario in which your business might boom? Or in what scenario might your business go bust? How much additional financing you might require in the next 5 years? Will my stake be diluted over some time? Can I expect new investors coming in? All those factors you'd be asking me if I were an entrepreneur. But the same questions investors in stock market do not ask.
Like Shark Tank, huh?
Yeah, almost. Yeah. What they are doing in Shark Tank to some extent is value investing. Because they ask the right questions about the products, businesses, and they try to know whether the business will be successful or not. So that's the actual
value investing,
actual way to invest.
But isn't it quite subjective?
To some extent it can be, but there are certain things you would want to know while investing in a business. Wouldn't you want to know about its profitability?
Yes.
Wouldn't you want to know about its product or service or whatever it's doing? Wouldn't you want to know about its viability? Because in thin air, no company can generate business in thin air unless it's a Ponzi scheme, of course. So that's
definitely.
But still, there are some things that are fundamental.
So there is a part of technical analysis in value investing. No,
there's not.
But then you said
understanding this.
But then you said you look at the revenue,
but revenue and all are not part of technical analysis. Technical analysis looks at price movement and the volume of trade.
Okay, but then you said a moment ago, you look at cash flow, you look at income statement.
That's part of fundamental analysis.
Technical?
No, that was fundamental.
Okay.
And technical is more towards charts. Charting is basically technical analysis.
Okay. That's good to know. I mean, let's say, nowadays I spend time with quite a variety of people, and they all are like, okay, the stock market is growing, we need to invest, and the stock market is falling. It's time to get out and all that. And to my knowledge, they have zero financial knowledge. My question to you is, what should people avoid doing in the stock market?
Avoid doing, if they're just starting in the stock market, I think first thing I'd like them to ask themselves is that, do they have the time and resources to analyze a company? Resources not only being access to financial statements and all those things. Resources, by resources, what I also mean is mental capability as well. Do they have enough financial knowledge to dissect the financial statements themselves? Understand about the business themselves? I think first starting point should be that.
Okay.
If not, then definitely they should take professionals help. There are fund managers in Nepal.
Contact him.
So, including me, but I don't have any registered company as such. So I'm not allowed to. I don't. Basically, I don't have any license because fund management license is given to an institution. So it's better if they go institutions where they can find professionals like me, or better than me as well. So it's better if they contact those persons. But if they have financial knowledge, if they have knowledge and they think they can dissect and all those things, the starting point would be first to try to make some kind of an investment policy for themselves. So ask themselves, what are they investing for? What's the reason? What's the goal for their investing?
Making money.
So if that itself is the goal, then we can work with that as well. But how much money?
Yeah, that's the main thing.
And in what time?
Oh yeah, that's the big thing.
Those two important points are there.
Because people are always wanting to make double their money.
Double their money in 6 months.
Oh, 6 months is a long time. Okay. Next week, man.
Next week. So basically, at least I know that it's not possible. It might be in short term, but it's not full-fledged. It's a fluke, basically.
How about the forex market?
Forex market, I've not had much experience in the forex market, so I cannot comment on forex. But forex, you would have to basically, to my knowledge, you would have to follow the macroeconomic trends for forex.
Macroeconomic, definitely.
Trends of companies.
So forex. When I was in Thailand, I was trying forex out, and over there, it was quite interesting because I was thinking of the forex market as a stock market.
Okay.
And in the second year of my bachelor's, you remember Sajal sir, right?
Yeah. Sajal
sir.
He went to Kellogg.
Yes, Kellogg's School of Finance.
School of Business. He did his MBA.
MBA over there. Yeah. So he needed a year for his master's, I think. So he was teaching us. And he did a really, really smart move, which was he asked us to open an investor PT account and trade in the US stock market. And that was quite interesting because every day we would come back and we would talk about the stock market.
Okay.
Like, oh, what happened to yours trades? What happened to my trades? Like, who's on top? Who's on the bottom? And he had a thing where he said, if you're on the bottom and you don't get back up, then you're gonna get a C in my subject.
Okay.
And like the guy on the bottom would always be like, oh my god, oh shit, how do I get up? And like that made us think a lot. But coming back to the forex market, I was thinking it's going to be the same, but it was a completely different game.
It's completely different, and I think it's most part is speculative.
It is.
Rather than investing and all this thing, I think it's part of speculation. Most of the forex transactions. But it's a huge market.
It is.
It's a huge market.
I mean, the broker where I opened an account in the past, he had written in his website like $4 trillion worth of cash is rotated in the forex market in 1 month.
Yeah, definitely.
Maybe
more than that.
Yeah. That was 3 years ago.
Yeah.
And I was so surprised. But yeah, maybe we can double the money in the forex market.
No, I think not so. In the short term, there's a story I read that as China removed its one-child policy, the quote of China, I guess China versus New Zealand dollars, if I'm not mistaken, New Zealand dollars. New Zealand dollars got stronger. So all those investors or speculators who had taken position in New Zealand dollars had significant gains in their accounts.
Okay.
So what might be the reason for that? I'm just asking you. Any thoughts about that? So China removing its one-child policy, one-child policy, and then the price of New Zealand dollar rising, appreciating.
A lot of Chinese going to New Zealand to make babies, or who was the thing?
Well, it's related to babies because what was forecasted was that as Chinese are allowed to have more babies now. So the Chinese dairy market, a significant percentage of the Chinese dairy market was in the hands of New Zealand. New Zealand was supplying a good amount of dairy products to China. So due to that, it was forecasted that the exports of New Zealand will increase. So due to the reason, there was huge buying pressure for New Zealand dollars, and it increased. So that happens. But still, that's one of a case. You cannot predict. No, I guess no one can predict that China, XYZ country will do so and so stuffs until and unless you have an insider who has access to policies of governments. That's a different thing. So if you have access to policies of government, then you can make money in forex market.
That's true.
Otherwise, it's about more knowing about macroeconomics and trends, business trends, and all those things.
Exactly. I was quite surprised by reading about the forex market because I found out a lot of things. Like 92% of the world's transactions are done in the US dollar. And the second most used currency in the world is euro. Third one is the Great British Pound, GBP. And the fourth one is the Japanese yen. Okay. I was thinking it might be Swiss franc or Singaporean dollar, but no, they're not even.
The fourth could have been yuan.
Chinese yuan?
Yeah, yuan. Chinese yuan, but
that was interesting. I also found out that Australia is a massive producer. I don't know if that's the right word, but Australia is a massive producer of gold. Canada is a massive producer of oil. So whenever there are fluctuations in the Canadian dollar, the prices of oil increases or decreases. So like all of that was quite like insightful for me. Another thing I wanted to talk about was arrogance and psychology in the financial market. So when I entered into the forex market, I was like, okay, I've done bachelor's in finance. I know my share. I know how to invest. And I go in and I ended up losing money 7 times before I realized, okay, I'm not that good in this. So don't you think people have that arrogance in the beginning? Like, okay, my broker told me to buy this stock. And the stock should increase. I know it will increase, and they're very blinded to that.
That's even I personally am a culprit of that arrogance. During the first phase of my career, initial starting days, I just completed CFA, and so you have that analyst attitude. The analyst attitude. That's
what do you know? I know.
The most dangerous thing, and you naturally have that analyst attitude, so-called analyst attitude, but slowly the market humbles you. Because you make certain forecasts about the market, about some companies. You try to calculate all those ratios and do some valuations and all the stuffs. But later on, the market does not react according to your thought process. And then you start, let's say in a good way, doubting yourself or doubting your abilities. Am I doing the correct thing? Is my thinking process in line with what should be? So then that thing creeps into and it humbles you basically. So, and after that, you get to know that, even after spending some time in the industry, slowly you'll get to know about how markets react. How are the businesses functioning in Nepal or any market? Because I have experience in Nepal, I'm talking about Nepal. So slowly how things move in Nepal, how things are in Nepal.
Definitely.
So, for example, the stock dividends that companies give is not real dividend, if you ask me. But still the market prefers stock dividends, up to the point that if you visit AGMs, if you attend AGM, the BOD that's seated on the stage, they get scolded for distributing cash dividends instead of share dividends. Actually, share dividend is not a real dividend, financially talking, because it's the same claim to the asset that I had before. It's just that the unit has increased, but the total value is the same.
It's like getting more of the same thing.
Yeah, same thing.
But the value is...
You have a cake, and you have a cake that had 4 slices. That was cut into 4 slices, and someone else came and
made 8 slices.
Made it 8 slices, exactly. And you're happy that you've more of the cake, but actually the size is the same. It's just that there are more slices of it.
Exactly. So what's the solution to that arrogance?
Solution to arrogance is experience. There's no other solution. I might say you should try to be humble in the beginning itself, but that won't happen, because life has to first happen, and then you realize slowly that things move differently. Things are different.
How about getting a mentor?
A mentor would help if you can follow, but I got mentorship in the work itself. So for me, doing the work and getting experience.
So who was your mentor?
That's more important. Ajay Dai.
Okay.
Initial days, because I worked at iCapital, so I'm truly indebted to the organization, because that's it's often said that your first organization is the most important one, because they nowadays there's a quote that I read, that they are the ones who have trusted you when no one trusted. So that's the first place that I landed job in investing. Before that, I was, of course, working as a teaching assistant. So Ajay Kumar Shrestha, Ajay Dai, iCapital. Then Vinit Dai was my investment manager. So he had a significant influence on me in my thought process, because they followed value investing tenets in iCapital. And particularly Vinit Dai was more into Charlie Munger side of the thing, because I was not exposed to.
What is Charlie Munger side of the things?
So
and one more thing, can you tell them the difference between Warren Buffett side of things and Charlie Munger?
No, there's not much difference, because Warren Buffett is like, first his starting phase was traditional value investing, buying companies that are below the net nets. That is, companies whose were basically current assets are net current assets are greater than the price at which they are trading. Basically, you don't find companies that are that type of companies in Nepal or in US as well. Putting simply, companies that are trading at below the book value. To put it simply, but not exactly, because if some company has a book value of 150 and if it's trading at 100, then that would be traditional value investing type of thing, because you're buying below the books, kind of a thing, but not exactly value investing in today's terminology or today's thought process. So he had that background, and through that he was making money, and at some point it stopped to grow, as in the size of business that he could handle, the amount of money that he could manage by following the traditional value investing approach, that was developed by Benjamin Graham and David Todd. So that started to tank out, because there were not much companies that were selling below the net nets, or for simplicity, below the book value. Slowly, then he met Charlie Munger. I think there's a whole story around them meeting. I'm not well.
You can go search it up on Google, right?
Yeah, you can search it. And then he mentioned that there's other way to look at businesses as well. You can buy good businesses at a fair price, or you can buy fair businesses at a good price.
Wait, repeat that again.
So either you can buy good businesses at a fair price, or you can buy a fair business
at a good price.
Basically, what Charlie Munger did was he moved the tenant of only looking at financials and some aspect of management, to trying to understand the business and how much potential the business has, and how much moat the business has around it. Moat in the sense that competitive advantage, barrier to entry, that we usually typically study in B schools. So looking at businesses from that perspective, Charlie Munger started that thing. Convinced Warren Buffett on that aspect. So I think Charlie Munger has a big role in the transition of value investing, how value investing has evolved.
He has a big hand to play in making Warren Buffett one of the richest men.
Definitely.
Right?
But he himself is a very humble person. Both are humble persons, and even he says that Warren Buffett himself would have also done the same thing. He might have done it some years later, but still he would have figured it out. He would have navigated the way. That's what Charlie Munger says. But still, he did influence Berkshire.
He saved him a lot of time, man.
How they function.
Yeah, an old man eating McDonald's every day. I don't know how long he will last, but he helped him save a lot of time.
Definitely.
But so you worked in the Nepalese industry for a long time, right? Not a long time, but a decent amount of time.
Yeah, decent. Yeah, it's around 5 years.
So how much money is rotated in the Nepalese market? Is it a lot, or is it like we need money from outside, we need more money from the government, or how's the scene?
We always need money. As in market, I guess you mean the stock market, right?
No. I mean like foreign investments from, let's say, rich people in this case, people who have a lot of cash. Let's put it that way. Not assets, but cash. They're investing in the market, right? Let's say hydropower, or they're investing in different projects for the development of Nepal. So Is it in billions of dollars? Is it in trillions of dollars? How like
it's in billions of dollars.
Billions of dollars. Okay.
Billions of dollars.
It's in billions of dollars. So we can say that people in Nepal have billions of dollars.
If you summation of it would be in billions, basically billions of dollars. But individually, particular project wise, you cannot exactly define it that way, because they are hydropowers which are more than 100 billion NPR. So basically 100 billion and more than 100 billion NPR almost amounts to $1 billion.
Yes.
So there are individual projects of that size as well, but there are projects that are smaller as well. It's a mix of both.
Have you ever seen a single person invest multi-million dollars in a single project?
Multi-million dollars in a single project?
Yes.
Yeah, there are.
Okay.
There are people.
Have you worked for a long time with them?
No, I have not particularly worked with them, but I have managed one of their accounts.
One of their accounts. Yeah. So have you communicated with them?
Yeah, definitely. Regarding the accounts.
Regarding the accounts. You're like, sir,
the investment.
Sir, I love your account. So
investment.
So yeah, my question is, how do they think differently about money?
No, basically, see, up until this day, my role has been more towards the equity market. Okay, so when you mentioned communication with them, the communication with them would be regarding the stock market itself. And one good thing about people with high net worth is that because they have, for some time, they are in business. Most of them have earned it through business. So they do know the nitty-gritty of business, and they do know that some investments take time for fruition, to bring the fruits. So usually when they hand over the money to us, 90% of the cases, they don't, try to ask much question related to, which companies you will select, what you will do. Rather, they ask about our process. What is the process that you follow while selecting business? So that part they communicate more rather than where you invest or why did you invest in, let's say, CHCL versus PPCL.
They trust you basically.
Yeah, without trust. It's this industry is built on trust.
The financial industry.
The financial industry in itself, and particularly investment industry, it's total trust because someone's hard-earned money is getting invested through fund managers.
Yes.
And that's the trust they are placing on fund managers.
Definitely.
So it's their duty not to do bogus things, but sadly, news about some bogusness also come out. So,
interesting. I have this one question I wanted to ask you. So on social media, I see a lot of people saying money is not real. So do you have, what does that actually mean?
So I think what they are trying to say is that if you look at even the balance sheet of Nepal Rashtra Bank,
yes,
it has around, if I'm not mistaken, 6 arba worth of, that's like 600 crore or something like that.
Yeah.
6 arba worth of physical currency, if I'm not mistaken, which is only 8 to 10% of the total circulated currency.
Yes.
Okay.
So that would be 60
So
arba.
I think that would be not 6 arba, 60 arba, if I'm not mistaken. 60 arba of hard currency, and rest, whatever, 90%, 10% would be that hard currency, and 90% would be all the flowing digital transactions and loaning it. The same loan becomes a deposit in another bank, and again the deposit is loaned out. So through that, out of the total money supply of around 600 arba, which is 6 arba in Nepali. So
in international system, how much would that be?
That would be around
600,000.
$50 billion kind of a thing.
Yeah, I believe you.
$15 billion.
50
billion. Yeah. 50.
Okay.
$50 billion.
So yeah, you were saying about.
So I guess due to that reason, they are saying that money is not real because 90% of it is not any minted currency. It's basically a computer-generated transaction. It's literally an entry in the computer. 90% of it is. So basically, they say that debt is money, which is true. Because suppose out of the 10% of hard currency, suppose you got 6 crore. Let's for an example, 6 crore in hard cash. Then you deposit it in the bank. okay, then bank can loan out technically 90% of it gets loaned out. So out of the 6 that you had, 90% of 6 would be 5.4 crores additional cash has been generated. So look at the money supply. Now there's not only 6 crore worth of money supply, there is 6 plus the 5.4.
Yes.
And that 5.90% of that 5.4, because that person who has taken the loan from bank will also deposit it somewhere, or will buy goods.
Yes, definitely.
So it will go into the banking channel. Okay, so 90% of that will also get loaned out. So basically, there's a multiplier effect. So that's why money is created in thin air, basically.
Don't you think like the cash flow is important in the economy?
It is.
It is, right?
Having said that, in that example, one thing that I have taken ceteris paribus equal is that I have not considered the goods that we purchased from outside. Basically, most of the goods that we purchase are imported.
Yes.
So that means the money will flow outside. So out of that 5.4 that has been loaned out, 2.4 he might buy goods out here. But 3.4, if he buys 3 crore worth of goods from outside, then that 3 crore has now vanished from the system. So that risk is always there.
Leakage.
Sorry?
Will it be called a leakage?
Kind of, you can see a leakage, but it's not any illegal or anything. It's just imported goods, so that will go out. So that's why we need to have productive resources here. We need to produce out. So along with the money supply, if the unit of production does not increase, then it does not make much sense. It'll only give rise to inflation after that.
This reminds me of the conversation we were having a few days ago about China. I mean, you remember the example, right? Like our friends were telling us, okay, we went under the bridge and then there was a light. There was a polar bear screen and everything.
All those things there.
And I was just thinking, like, is it ever possible for Nepal to reach there? And I think it is possible, but I am not aware of the steps that the government is taking right now. Do you know anything about that, though?
My analysis, and most of the people will say the same thing, they are not going the correct way because we don't have clarity in policy.
Okay.
So we say we want to be a touristic nation and tourism will be a huge part of our economy, but we have seen the risk of having that as well. When Corona hit, the places where actually tourism was a big part of the country, example Sri Lanka, Maldives, were hit. For us, tourism is not that much a big part. It's around 7 to 10% of the GDP. It's not that huge. And if we want to make it that huge as well, we need infrastructure and we need properly trained human resources. Because some of my friends who come from, who have studied abroad and who come here and who visit places, hospitality, places, sometimes they go trek and all those things. They stay in some of the hotels. They usually complain that the service is not good. They don't even smile. So we've not trained people for hospitality. And we're talking, all those things about being the most beautiful country and trying to, get all the people to visit our country. I guess that's not possible. We need clarity in policy.
But won't that come if... I don't think that would come if we don't have trained people on the top.
Yeah, that's there.
That's there, right? And not only trained, but experienced.
Experience, and we need to do a lot of, back-breaking job. We still have to do a lot.
One generation has to go through all of that to change the country.
Definitely.
But it is possible.
Even I guess multiple now, because we're already many, many years behind, many industrialized nations or first world nations. So
it's very difficult.
Some things are there, like technology and all are at our disposal, which are good, which were not there 50 years ago. So we'll have that leap as well. There's a chance for leap as that. But we need clarity. So, for example, there are investors investing in solar energy at Tarai region.
Yes.
Where we could have planted crops and grown crops. So there should be clarity of policy. Is energy security our concern or is food security our concern? Okay, the narrative might be energy security is our concern. If energy security is our concern, won't we be able to fulfill our energy needs through hydropower itself? Do we need solar in that sense? Because solar does not have a good plant load factor as such. And you're wasting places where crops could have been grown, and it could have provided some food security. So policy clarity needs to be there. If food security is not our plan, then be it.
Yes, then be it.
Then there should be clarity in policy that will import everything and eat, like Singapore does.
Yes.
But to that, what Lee Kuan Yew clearly told Singapore is that if you do not grow your economy by at least the inflation rate of food-based inflation rates, then will not be able to survive. So we need clarity in policy.
We don't have that, man.
So that's the starting point. And then it's our responsibility as citizens to work as well. Work hard.
Yeah, I agree with you, because I see everybody's working hard, but they're not they don't have a direction.
Yeah, without direction, it doesn't bring the results.
Yes.
Results.
It's like everybody's earning their daily wage. Everybody's getting to eat their lunch. But it's just that. Yeah. There's no particular growth.
Yeah, you want to make someone, suppose XYZ person wants to make a very sharp sword. But the group of people do not have any planning, and someone is trying to forge the steel, someone is, without it getting properly hot, someone is trying to hammer it. So that's the situation, right?
Exactly.
There could have been processes. There'll be time when people will be not working towards particular thing on that sword, and there'll be time when people will be working towards particular thing in that sword. So according to that, even though any analogy can be made, because economy is vastly complex.
Yes.
We have own culture as well. So I guess that's also that might also bring some hindrances. How we look at life.
Okay. Yes.
We look at most of the time what our narrative is that rather we have
a
relaxed life, which is not bad, but
it's not fruitful.
You should not complain.
Yes.
About not having development.
Oh, we complain all the time.
If you're okay with that, then the natural result will be less development.
Yes.
In this phase.
I mean, there's nothing wrong with that, but I think everybody wants growth.
Yeah.
And talking about growth, you completed your CFA in which year again?
I passed my exams in 2018.
2018?
Yeah, June of 2018. And
level 3?
Yeah, level 3. And I received my charter in 2021, I guess, at around September.
Why so late?
Because we need 4 years of work experience.
4 years? Yeah. ACCA needed 3, but okay.
So
that's a lot.
That was the requirement.
So when you were studying for CFA versus when you were studying for BBA, what was the difference you found?
Because there was a vast difference, because in BBA, frankly, even though I myself now teach, but during my days, what we used to do is study via slides of the teachers. And we, except for some particular subjects, we rarely, read cover of the book, cover by cover of the book. I remember very less during my bachelor's. We more of preferred reading the notes and slides and all this.
Okay.
Even though that's not the good way to build knowledge.
Yes.
In CFA, you've no options. You need to hit the books.
Yeah.
That was a major difference. You need to hit the books and hit it hard as well. So you need to, really put in the hours every day. So that was a major difference. And another major difference was that, in CFA, you could focus on the things you liked. I already liked studying finance. So most of the subjects were related to finance.
I can see.
And so, there was, it was my cup of tea kind of thing. Here you had to study other subjects also where you might not be so much interested.
Marketing, philosophy, all of that.
But having said that, now after I've spent some time in the investment industry, every subject is important, because if you don't understand the marketing strategies, you'll not be able to gauge the revenue of the company.
Yes.
So that's also important, So looking back now, everything is important.
Everything is important.
Try to grab everything. Of course, a person cannot know everything,
but try to learn as much as you can. But learning, I believe, is a superpower, though, because okay, you might not have money, but if you can learn new skills, you'll be able to make money.
Yeah, definitely.
But if you have money, but you have no skills, no knowledge, it's going to be zero.
Yeah.
You can have Saraswati and not Lakshmi, but you'll get Lakshmi.
Yeah.
But if you have Lakshmi with no Saraswati, then good luck.
And it's always best to have both.
Always.
Wealth is also required, knowledge is also required. I respect wealth as well as knowledge. So
Definitely, it gives you freedom. It gives you a lot of things. But yeah, I mean, this podcast was quite interesting. We learned a lot about the financial world, stock markets, professional studies, and everything. And yeah, it was wonderful having you here, Dave. So thank you for coming. I hope we can do a part 2 again.
Thank you so much, Sudev, for
Yeah.
this opportunity and for growth of this podcast.
Oh, thank you very much. And you're planning to start your own, right?
Hopefully.
Hopefully.
Let's see.
All right, guys. So in the future, if you're watching this video, search for his podcast. Tell him, write in his comments that you came to his podcast from mine. And yeah, I'll see you guys later. Ciao.